Each day on Rule 32 is time and price specific. And I mentioned this before. You can't say that every day the rally is going to take 10 minutes or 15 minutes. One day there'll be a lot of 7-minute legs. Other day there'll be 12 or 14-minute legs. It all depends on the day. And you've got to let the market tell you what it is. You can't go in with a predetermined expectation that this is the day it's going to run straight up. Because what happens on a day when you do have it run straight up and you have a big trend day? Well, the market's tired. It needs some time to think about that, and you'll get a choppy day the next day. And you can't think, my loss is so much, I got to get it back. Because that's thinking about the money, not the market. You got to think about the market. The money takes care of itself if you concentrate on what is this market telling me, what's it doing, which way is it going, and how am I going to trade it, and when does my time come? Some days I'll wait an hour, 2 hours until I see what I want. And I mentioned some of the things that I look for. I look for the legs, the first leg to come in, the consolidation, the equilibrium, the 618, and I look for time to pass. And I also look at the time of day. When did it rally yesterday and the day before? For instance, let's say the time of 3:40 East Coast time comes to mind. We get a lot of moves into the close, big moves, that late in the day. If I'm not in the position yet and I'm looking for it and I see that time coming up, I know I'm getting near the time that it's going to run and I got to get in. Well, win or lose, I don't know what's going to happen, obviously. I get in, it either works out or it doesn't. Very often it does, fortunately. On Rule 32, I mentioned that no 2 trading days are ever alike, which is why proven strategies often fail. I remember when I first started trading on the floor years ago, I had a very good March, and I made a significant amount of money during March. April came along, I did the same exact things I did in March. I tried everything I knew, double up and reversing, adding to positions when I thought I was right, and I lost all the money I'd made in March. Well, the market had changed on me, and I was doing what worked in March in April. And the market had changed, and it wasn't going to give me profits in April. So that's what I mean about knowing the kind of day you're having. Now, the question then comes up, how do you know when you're having a trending day versus a non-trending? And this is a difficult question to answer. I don't really always know. But I can tell you pretty well after it starts trading what should happen, and that's why this type of information is valuable to you, because if you know that most of the time there's a trend between, say, 9:30 a.m. East Coast time and 10:30 a.m. East Coast time, and it doesn't come then, you have to either push it back because later in the morning because it should come in. And you need to know these things to help you trade. I mentioned this, that each day is time specific. The number will vary from day to day, and you have to let the market tell you. Again, on any given day, you don't know what's going to happen. But the important thing is you don't have to know in advance what's going to happen. You have to know how to read the market and how to trade. When you read the market, you look at how it behaves, you do the measurements, you're always calculating, you're looking at indicators, and then you say, I think I see a pattern here. I think it's going to do this based on this. And then it's just a question of, over time, the probability should work out for you. And if it doesn't, if you get in the trade, if it goes negative on you, you take the loss and you forget about it, and it's over with. As opposed to staying with it, letting it get worse. I don't think I've ever seen a trade that went against me that ever got better. They almost always get worse. So you have to be flexible and quick and not wedded to any position. If you want to see some good symmetry, turn to page 159. Here you have 600 points in 21 minutes straight up in the afternoon on a 1-minute chart. At the top, you see 600 points in 21 minutes straight down, and where does it stop? Right where it started from. This is the inverted V pattern, and it's just a work of art to people who study these patterns. So that's what I mean about symmetry. It's there, and you just have to be able to identify it and follow what it's telling you. I think I hinted at Rule 33 earlier in the presentation here, but I want to go over it again, and that's look for time and price velocity to speed up in the afternoon. What will happen in the afternoon as we approach the close is that everything tends to speed up by a factor of 2. So if it took 30 minutes to rally 400 points in the morning, it'll go 400 points in 20 minutes in the afternoon. It's as if everything becomes faster and faster as you approach the close. And on a trending day, what you'll find is that one side will predominate. In other words, if it's going up, it'll become more bullish at the end. It'll often make the high of the day, indeed, at the final 1 minute, which is why I love MOC orders, market on close orders. And the reason for this is, in my opinion, is that hope springs eternal in the futures market, so that the people who were sellers earlier in the day are not willing to get out until the end when they realize they have no place to go. They'll rush in as buyers and push it up even more. And you see this again and again. The sellers think, okay, I can get out of this on a break in the close. There is no break, or their brokers call them and say, we're getting you out at the close because it may go 1,000 higher on the open tomorrow. So what happens is, as it gets closer and closer to the close, you get these wonderful, strong, pure moves right into the close. And that's why I like MOC orders. MOC orders are always filled. If you have a bigger order, say a 10 lot or something, you can often get the floor to give you the edge. Why? Because there's a floor trader that's on the wrong side, and he's got to get out at 10, and the market's going to close in 30 seconds. He's not going to look around for a 1 lot guy. He's going to look for your 10 lot order, and he's going to give you the edge. And this is the only time I find where the fills can really be good, is when the other side's panicking and they're giving their money to you, anything to get out, and you have the right side. Of course, if you're on the wrong side, it works the other way, and anyone who's traded for a while, knows how that works. You're short, and you think, well, I'll get out on the close, there'll be a slight dip, and it won't happen, and then there'll be panic buying, and you'll have to join them at the end, pushing it up to the highs. And I talk about that on the herd instinct. And here it is again, the velocity tends to speed up by a factor of 2 or decrease by 50%. It also goes, it often goes that way in terms of leg 1 and leg 2 as well. It'll be 10 minutes on the first leg and 5 minutes on the second, or reversed. 5 minutes on the first leg and 10 minutes on the second. In other words, it goes there real fast initially, sells off into the consolidation, makes the equilibrium, and then it takes a little longer, but it ultimately gets there. And here again on 163, I talk about that. The velocity on the first and second legs can differ by a factor of 2 or 50% reduction. The first leg of 7 minutes takes 14 on the second, or the first leg of 14 takes only 7. But look at the numbers in terms of that factor of 2. 14 divided by 2 is 7, 18 divided by 2 is 9, 10 divided by 2 is 5, and so on. And you'll see this symmetry coming up again and again. On 164, we've got the V pattern, but what you'll notice is the morning and afternoon trend are different in time, but similar in price. So you have an hour and 15 minutes down in the morning. It seems to want to take its time to go 880 points. But in the afternoon, in less than half that time, in 30 minutes, it goes 990. So it retraces the whole day's move, goes into new high ground at the end, and it does it much quicker. Another reason I tend to like the afternoon trade, but I have to stress this as well. There are times in the market when the afternoon trend is pure and simple and uncomplicated. Other times, the good trend will occur in the morning, and this will shift over time. So I don't want you to go away from looking at this saying, George says the afternoon trend is the best. At certain times, it's the best. There are certain months, certain weeks when the afternoon pattern will be the best. But that doesn't mean that can't all shift and it'll go back to the morning. It will go back and forth is the actual fact.